Hey there friends, welcome to another video. We will now talk about 3 reasons why I think Tesla stock can fall down to $100 in 2023. So stick around to find out. Tesla stock has been one of the most hyped and talked about stocks in recent history. The trajectory Tesla stock has been on is something out of a Bitcoin playbook. More than 10 times in its first 5 years in the stock market, then doing that again in the next 5 years, making it already 100 baggered, to absolutely crush it for the next year by almost going 400x. I mean, it is what keeps people engaged and interested in this stock. The aura that surrounds a company and a stock that goes on such a path is just phenomenal. And the people that were lucky enough to step into Tesla on the right time now call themselves financial experts because they had one great call. And I would argue for most of them it's 90% luck and 10% skill. But maybe I'm just jealous, right? So since the top 1 year ago, the stock has been cut in half, and for sure in the last half year has been on nothing but a downward spiral. Now the question is, will this get resolved and Tesla find its footing, or will Tesla bounce back and fly to new highs? Well, I think more than likely Tesla stock will find new lows and will hit the magic $100 price point. The first reason why I think Tesla stock will continue to fall in 2023 is China. Tesla has reported that they are shutting down the Chinese factory because of COVID restrictions. Not that they have to shut down their factory because of these restrictions, nope. It's that demand for Tesla cars is low because of these restrictions. You get it? I think this is, as most things, not the whole story. Yes, I do believe Tesla finds a lot of headwind because of these lockdowns, and this does create a problem for demand. But I also do think the demand for Tesla cars in general in China is lower than what Tesla expected, and this lockdown issue gives them a pretty nice excuse. China is a really competitive market to be in for Tesla. The most competitive for electric cars in the world actually. And even though Tesla is consistently in the top 10 EV cars sold in China, it doesn't have a huge market share like it does in other countries. Not helped by the subsidies for EVs stopping in 2023, they are facing some major headwinds here. Now the second person I think will be responsible for the fall to $100 is Mr. Elon Musk himself. Don't get me wrong, I think it is a brilliant man and he knows how to run a company very well. However, his outspoken personality and his recent ramblings on Twitter and on social media in general have impact on the Tesla stock price. We see the sharpest decline of Tesla stock ever since he took over Twitter. He had to sell a lot of Tesla stock to pay for it, that's also a factor. But on the whole, he communicated like an a-hole on anything and everything, really. Hurting the brand image of Tesla and therefore hurting the stock price. And since Elon is not done with Twitter and likes being a controversial figure online, I doubt we will see an end to his craze anytime soon. Having Elon focus full-time on Tesla is a great thing to have, but now he is preoccupied with his other ventures, like the Twitter frenzy, being a CEO and chief engineer of SpaceX, founder of the Boring Company, founder of Neuralink, and founder of OpenAI. While I do think that most of these things only take up a little bit of his time because they run mostly by themselves, all of them put together make him lose too much of focus out of Tesla. So we had China and Elon Musk. The third one is less specific. The third one is the macro environment. Now we all know that the macro environment of late hasn't been great for companies. First there was COVID that created supply shortages in the chip industry, for example, which had its impact on basically everything else. And then we had the war in Ukraine with all its uncertainties, and to top it all off, we have the biggest inflation in my lifetime. So as far as macroeconomics go, things could be better, I guess. You see, when things like this happen, every single stock goes down. And especially the more speculative stocks go down the most. There are exceptions like the oil companies of late, but as a rule of thumb, most companies will go down in these environments. Now, Tesla is seen as and sells itself as a tech company. It is not your traditional car company, they say. And this puts Tesla together with the more speculative stocks. This makes Tesla more vulnerable to a higher downfall. And this is what we see in the share price. For next year, inflation won't be over. We might see a slowdown, but can you really say that having a 7% inflation rate instead of a 10% is that much better? As we discussed in point 1, COVID still has an impact on Tesla sales, and the war in Ukraine won't be over next year. So uncertainties surrounding that will still exist and keep being a headwind in the broader stock market. So these were the 3 things that I think will keep pushing the Tesla stock down for the new year. What do you guys think will happen next year with Tesla? Let me know in the comments down below, and see you in the next time. Bye.